Welcome to Profit Talks. I'm Mike. Today is Monday, August 24th, 2026. And as usual, today we'll go through the most interesting markets on Polymarket and see what this week can bring us. So the title for today's episode is Elections, Rates, and Wars, as this is pretty much 100% of the focus. But as you can see, we've got 60 others and pretty much 22 different markets between them that we're going to analyze. And of course, on the top of our agenda is US with the midterms and the Fed, as well as Brazil presidential election. Then we go briefly over South Korea, where we also have a question about rates. Then we move to the Middle East, where, of course, I will go over the Iran war and what's happening with the Houthis, as well as the Israeli election that is coming later this year. And lastly, we go to Europe, where I go over the Ukraine war and the last week's escalation. And finally, we tie it up with some markets on AI, especially Anthropic and its potential IPO, as well as releases of the new models. Starting with the US, we have the midterms, which will be a weekly occurrence up until November, because this is one of the most consequential events that we can currently cover next to the Iran war and the Ukraine war. Then I will go over briefly the 2028 presidential election, where I want to comment on last week's moves. And lastly, I will go over the Fed, the upcoming Jackson Hole speech, and what traders think can happen on the September meeting. First, the midterms, and here the interesting case is that, as you see here in the subtitle, there's 50-50% chance on the Senate control, so this is a coin flip. And at the same time, the base case is the Democratic sweep, and this is just because the Democrats are the heavy favorites to win the House. But when we dig a bit deeper, so outside the markets, the forecasts and the models that feed the markets, we can see two divergent models, because on the one hand, we have Nate Silver and his generic ballot average that puts Democrats at an advantage, as well as his Senate model that gives them, I think, somewhere around 5 points of advantage. However, he calls it a toss-up. And then on the other side, we have adjacent, which still gives slight Republican advantage in its Senate index. So traders are essentially split, even though there are reports that Kushner met with Hakeem Jeffries and discussed with him how the White House and the Congress can cooperate post the midterms, which would suggest at least that the Republicans fear that they can lose the Senate. But ultimately, I think coming forward, once the primaries are fully over, we'll have a lot more attention to these markets, to the polling averages. We'll have a lot more polls, and that's why I wanted to start covering this market on a weekly basis, just to have a proper grounding and context as we approach the elections. When it comes to primaries itself, I think the most popular one now, at least, is the special primary in South Carolina. At some point last week, Darlene Graham, so the sister of the late Lindsey Graham, had 92% chance of winning. Now she's at 69%, and this is just because she had pretty much an awful week. So first thing, she said that national security is not really her thing during a debate, which lost her 24 points in 2 days. Then when the early voting opened, her opponent publicly questioned Trump endorsement of her. So ultimately, when we went into the weekend, Trump needed to rally for Graham and Myrtle Beach. However, the price only stabilized, and tomorrow there is a run-off day where we still expect Darlene Graham to win. However, her opponent put quite a fight. Now let's move on to the presidential election. Here I wanted to comment on the last week's repricing. So what we have here is AOC safely in the lead now. So her announcements from last week, or her actions from last week and the previous week, sustained the price, and she is now a slight favorite to win the Democratic nomination. At the same time, Gavin Newsom continues his dive, so from the clear favorite. At some point last year, he had, I don't see it. I don't see it here. But at some point, he had like close to 40% chance of winning the nomination. Now he's tied with Ossoff, and Ossoff is emerging as a strong contender just because some private polling is showing that he can beat both Vance and Rubio by the widest margin of pretty much anyone on the potential Democratic ticket. But what's, I think, the most important going into this week and the next few months is that a couple of announcements from AOC made her a clear favorite. When we combine this with how good the left progressive wing of the Democratic Party performed during the midterms and the primaries, so mostly during the primaries, so midterms are ahead. So during the primaries, we see a clear pattern that she can emerge as a leader of this faction that is getting stronger and stronger every election. And just to give it some justice, the Republican nomination forecast is unchanged. J.D. Vance is still a strong favorite to win it. Rubio is in second place, around 20% chance to get a nomination. And he's falling as, at least recently, there was no endorsement from Trump, bar a small comment about it needing to be J.D. Vance in the end. So there is nothing to push Rubio up. He's also not really visible during the Iran war or any other operation that could give him some credit. And ultimately, I think we will need to wait for next year to see some proper action on this market. So let's move to the Fed now. And what is happening is that after the data dump that we got 2 weeks ago, traders pretty much expect Kevin Walsh to hold rates during the September meeting. So the market is still uncertain just because there is this whole event in Jackson Hole this weekend, and Kevin Walsh will speak there as a chair. He will comment on the recent data dump, and at least the expectation is that he'll give some insight for traders on how to approach the next meeting. So if you ask me, I don't believe we are getting a hike right now. Kevin Walsh still has good relations with the executive branch, and I would expect the executive branch to put up a lot of pressure to not raise rates coming into the midterms. So I think during the Jackson Hole meeting, we'll have a confirmation of that. But there's also another scenario in which Kevin Walsh remains silent when it comes to the most important questions. But anyway, my forecast here is that we'll have no change in interest rates, and I'll probably give it closer to 75% at this point. However, when we look at the wider hike forecast, traders still expect a hike to happen this year. There is still 55% chance of a hike. And I do think it's possible, considering all the data that we are currently getting. However, I do think that the best time to hike would be after the midterm, so I think during the December meeting. And just to give it some justice, there's pretty much no chance of a cut this year. No economic indicators show that the cut is needed, and there's not a single person on the Fed board that actually had something in mind about cutting. It was either a hold or a hike during the last meeting, so I don't really expect anyone on the board to change sides and suddenly advocate for a cut. And that's it when it comes to the US. Now let's move to the Americas, and here we have two events to cover. The first one is the Brazil presidential election, and the second one is Canada trade deal and the recent collapse of the trade agreement between Canada and the US. So first of all, Brazil presidential election, we are entering the crucial period, and the lead that Lula had before has pretty much halved. So recent polling shows that Lula is still the heavy favorite to win the first round. However, he has pretty much no chance of winning it in the first round. So both Lula and Flavio Bolsonaro will advance to the runoff stage. And there, some polls start to show that Flavio and Lula are like in a statistical tie. So it is impossible to say who is the favorite based on the margin of error of those polls. We can see that after somewhat of a lull, Flavio Bolsonaro is on the rise. So ever since July, like second half of July, he's going up, while Lula is slowly but surely going down. If Flavio Bolsonaro is able to sustain this trend, I think we'll have a very close election in the next few weeks, and we can also expect America and Trump to try and influence what is happening there, as they now have very good relations with Lula. Lula is a left-wing politician, and they would much rather have Bolsonaro, who they defended and with whose father Trump also had a rather good relation. So this one we'll be definitely watching and give you more updates as we have some news coming out of Brazil. And now a quick comment on the recent trade talks collapse. I don't have anything to say specifically about the 50% tariff or the talks that were happening last week. I was always more interested in the wider USMCA, which it was supposed to be extended or is supposed to be extended this year. Otherwise, it will go over annual reviews. And my understanding is that if Trump cannot make a deal with Canada or doesn't want to make a deal with Canada for like domestic political purposes, to like showing him as winning another trade war is supposedly good for his rating. But tossing that aside, if there are so many issues with signing a simple tariff agreement, I don't really see the US being willing to extend a comprehensive USMCA. And I think traders are aligned with me here because the chance of a deal of the extension happening went from the top of 57% at the beginning of July to 13% as of today. Now let's take a look at Asia. Here we have one interesting market, and this is South Korea rate decision. So South Korean financial markets became kind of famous this year. We saw massive volatility there. Pretty much the whole stock market behaved like one big meme coin, going up over 100% with at least 20% pullbacks throughout the year. But underneath those market moves, there is a wider trend. So due to the AI boom, South Korea is looking at an export boom when it comes to semiconductors that they produce. So ahead of this week's rate decision, some Korean analysts realized that it is very likely that the GDP forecast, that is also coming on the very same day that the rate decision is coming, will be increased because of this export boom of semiconductors. At the same time, they also see upward revision of the inflation forecast, and combining those two makes a hike rather likely. So as you see, barely 2 weeks ago, there was only 22%, 23% of a hike. Now we are at 70%, and I would say that the market is right here. If we really see such a revision in both GDP and inflation forecast, then hike is inevitable. Additionally, central bank members in Korea themselves said that they see the terminal rate above 3%. So while the mainstream media still says that it's a 50-50 split and we don't really know what can happen, prediction markets, I think, have figured it out, and they give a lot more probability to a hike. Now let's turn towards the Middle East. And here, of course, we have the Iran war. So last week, the MOU expired, and Trump, along with Scott Bessent, announced or pre-announced, because we were still waiting for the official and final announcement, a new economic war against Iran. They teased some sweeping sanctions, and they're all supposed to go into effect on Monday. But up until now, we still have no idea what kind of mechanisms will be introduced. So, on the other hand, we also see Iran trying to threaten the US and anyone else who joins the economic war against the country. They threatened complete shut down the Strait of Hormuz. They threatened to target energy infrastructure in the region, etc., etc. However, what we see on the market is very strange, because we see there is essentially 91% chance of the US-Iran ceasefire continuing throughout the end of the month, and there is around 75% chance, as you see right here, of the ceasefire continuing through September 30th. So even though we have all those escalatory narratives being thrown around social media and mainstream media, the traders don't really see a lot of risk of renewed hostilities or kinetic action between the two countries. Pretty much the same thing can be said about Israel and Iran. So here as well, traders don't expect any action, even though there is a war escalating, and I'm pretty sure Israel will join the US in whatever sanctions or new sanctions will be put on Iran, if they will be even put there. So here, traders don't see a risk either. So let's make sense of it. If there is no risk, no increased risk of ceasefire violation, and there's also no increased risk of US boots on the ground, even though Trump himself said that the ultimate defender of the bond yields is the US military itself. So he kind of teased the possibility of going kinetic again, but no kinetic markets are showing any kind of action. At the same time, we see some counterintuitive action on peace markets. So when we look at the announcement of the end of the Iranian blockade, the market went up from 67 to 73 cents in the last couple of days. At the same time, the Strait of Hormuz traffic normalization market also went up from 29% to 35% in a matter of a couple of days. And this is all fueled by two main arguments. So the first one is that there's supposedly a renewed effort to resume the negotiation between Iran and the US, and this is what Pakistan is currently trying to do. And on the other hand, we have Iranian officials themselves saying that the best path forward is a deal. So even though we see rather bearish narratives going around the media when it comes to peace, so economic war, threats of escalation, threats of targeting new countries, even countries beyond the region, they don't really move the market. And what moved the market is a possibility of a deal. So what I understand from this price action is that traders actually kind of expect the taco. So whatever will be announced today, I think they expect it won't be introduced, or it won't be severe enough to actually cause any damage. And at the same time, there's been several signals in the last 2 weeks that negotiation can or are progressing. So traders try to stick to that and be ahead of the curve when it comes to a potential deal narrative that can emerge in the next few days or a couple of weeks. And as you can see just here on this market of US Iran diplomatic meeting, it also went up from 19% to 27% over the weekend, showing that or proving again that the war narrative has little impact on the hopes of peace. When it comes to the Houthis of the other side of the Arabian Peninsula, the market, even though it saw a lot of action last week, is pretty much flat. The Houthis themselves were rather quiet last week. So the last claim strike was 4 days ago. The weekend was very quiet. At the same time, the crossings were a bit lower, but nowhere near the shutdown threshold of 10 vessels a day. However, there's been some movement on the ground, and around 2,000 Houthi fighters reportedly moved towards Yemen's west coast. I don't really put a lot of faith in those signals. Like 2,000 Houthi fighters is not a formidable force by any measure, and I don't think this is a signal to watch for. So here on the bab-el-mandeb Strait and between the Houthis and Saudi Arabia, I think the scenario I described a few weeks ago in the video is playing out exactly as foreseen. And lastly, in the Middle East, just a brief on the Israeli election. So what we can see is that pretty much ever since the beginning of the Iran war, the chance that Netanyahu will remain prime minister of Israel is sliding. March 5th, so the very beginning of the war, was his record high of 64%, and we are down to only 27% as his opponents are cashing in on the fact that the Israeli population is not happy with how the war went, is quite tired of 3 years of war, especially since they see little effects. They don't see Iran being defeated anytime soon. And at the same time, they also see that they need to take more action in Lebanon and around Syria. They also want to deal with Syria. So Netanyahu is going against the current, or has been going against the current for quite some time now. And with 2 months till the election, he has only 1 in 4 chance of keeping his seat. Just a disclosure, I'm on no on this market, so I also don't believe Netanyahu will be the next prime minister of Israel. I think his time is ending now, and he had every opportunity to use the situation differently, and now he's in caught, so his main opponent can take advantage of that. Now one more war in Europe. This time it's the Ukraine war, and last week we saw a lot of escalations on pretty much on both sides, because on the one hand, we saw a lot of Russian drones trying to target Europe or European infrastructure. We saw a few air drones being destroyed, as well as a sea drone that was trying to target the almost finished gas infrastructure in Romania. So there's been a lot of escalation coming from the Russian side, but at the same time, later in the week, and as far as I know, even today, NATO started to respond, and they are performing some kind of an operation, some air operation around Kaliningrad. So there are a lot of NATO airplanes around Poland, around the Baltics, and around the Baltics, and above the Baltic Sea as well. They're doing reconnaissance. We are not exactly sure what is the aim of the exercise, but reading between the lines, this is most likely a response, and it's a threat that if Russia continues to target beyond Ukraine, that NATO can always move on Kaliningrad, which is extremely difficult to defend from the Russian perspective. At the same time, we also need to remember a wider trend. So Ukraine this year had quite a lot of wins. They targeted oil infrastructure as well as e-commerce warehouses around Russia. Their strikes went deeper, were more regular, more missiles, more drones were used, and the damage that was done to the Russian economy this year is pretty severe. So we need to put this recent escalation in a context. Russia is not probing Europe just because it is bored. It's probing Europe most likely because it is looking to escalate somehow this year. This 2026 showed that when it comes to the war of attrition, Ukraine has learned a lot. It cedes territory very slowly. Russia is also very slow to actually gain this territory because of traps, mines, etc. At the same time, Ukraine developed its production capabilities when it comes to drones and missiles, and is now able to hurt Russia, and Russia is unable to defend such a huge terrain. So what I do see is that after the Duma election, that is in the second half of September, we should see firm signs of some kind of escalation being prepared on the Russian side. I'm still unsure whether they would try to target deep into the supply chains, so on the European side, or they will rather open a new front in Ukraine or try something entirely different. But I'm pretty sure we'll see something. And lastly, some news from the world of AI. And once again, we are focusing on Anthropic. So in the last 2 weeks, I saw quite a lot of comments on X and other media that Anthropic is falling behind, that Fable or Opus are not so good, that a lot of people are resigning from Claude subscription in favor of Grogbot or ChatGPT or whatever. But the reality is that when we look at the markets, it's clear that Anthropic has, I think, the top 5 or top 6 models, and it's not changing anytime soon. There's no rival being shipped, and when it comes to end of August, Anthropic is still king. At the same time, Anthropic is trying to use this momentum of having the very top model, so the Mythos Fable class models, and IPO and beat SpaceX when it comes to the biggest IPO ever. So traders now see Bloomberg reports that Anthropic expects to match or top SpaceX's $86 billion record raise. Previous rumors said that Anthropic is targeting a $2 trillion valuation, and traders now think there is almost 50% chance we can see Anthropic above 2.5 trillion by the end of the year. If that happens, then Anthropic will be the absolute king because they would milk the AI wave. Absolutely, they will raise a lot of money and they will be able to really expand the compute and work on the models they and perfect the models they currently have. And that's all for today. If you like my weekly episodes, you should take a look at profitnoise.com, where I publish the same version in text and a bit more detail. I also have regular deep dives on global events. And this week, I will publish a deep dive on the Fed and the next couple of Fed decisions, pretty much all the decisions at the midterms, what we should expect, what we should expect out of the Jackson Hole, and where the markets are, in my opinion, mispriced. So thank you for watching. If you like the video, give the thumbs up, click that subscribe button, and help prediction market analysis spread across the mainstream. So thank you once again, and see you next week for another round of Profit Talks.